What happens if my estate exceeds the estate tax exemption? Have you ever wondered what it means for your estate if it exceeds the estate tax exemption? This is an important question for anyone involved in estate planning. Let's break it down in simple terms. If your estate is valued above the federal estate tax exemption amount, the excess value will be subject to federal estate tax. Currently, this tax can reach a top rate of 40%. As of 2025, the exemption amount for an individual is approximately $13,990,000. This means that if your estate is worth more than this amount, you may owe taxes on the value that exceeds it. For married couples, the good news is that you can combine your exemptions. This allows up to about $27,980,000 to pass on without incurring estate taxes. When an estate exceeds this exemption, the executor, who is responsible for managing the estate, must file a federal estate tax return. This return will calculate the tax due based on the fair market value of the estate's assets at the time of death. It's important to note that allowable deductions, such as debts and certain expenses, can reduce the taxable amount. From an estate planning perspective, exceeding the exemption can significantly impact the amount your heirs receive. This is why effective estate tax planning is essential. There are several strategies you can use to minimize your tax liability. For example, you might consider making lifetime gifts to utilize the gift tax exemption, which is the same as the estate tax exemption. Establishing trusts can also be a smart move. Another option is portability, which allows a surviving spouse to use any unused portion of their deceased spouse's exemption. This can be a great way to maximize the amount that can pass tax-free. Keep in mind that the current exemption amount is set to change. After 2025, it is expected to revert to a lower level, around $6 to $7 million per person, adjusted for inflation. Recent legislation has increased the exemption to $15 million per person starting in 2026, which will also be indexed for inflation. Now, let's talk about the waiver of spousal rights. Spouses can agree to limit or waive their rights to a share of the estate. This can have implications for estate tax planning. However, it is essential to structure these waivers carefully to avoid unintended tax consequences. So if your estate exceeds the exemption, remember that the excess will be taxed at 40%. You will need to file a tax return and pay the tax due. Utilizing planning tools like gifting, trusts, and portability can help reduce the taxable estate. The exemption amount is currently high but is subject to change. Spousal waivers can also influence how the estate is distributed and how taxes are planned, but they requiring careful legal handling. Understanding these factors is vital in estate planning to ensure your wealth is preserved and your estate is distributed according to your wishes while minimizing tax burdens.